All right, good morning. I'm going to be doing my wargaming for November 19th. And starting on the daily chart, we can see that we closed below NFP Friday and previous month 50%. So now we're expecting 50% red day daily candles, 50% green day daily candles. We're anticipating that at least or possible come to quarterly lows, right? They can be completely destroyed if we close above previous month 50% of this NFP Friday. But for now, that's the conditions that were met based off of this candle Monday and this candle Tuesday. There's a 76% probability that we close below, we don't even, the high is of the day is below previous day high. There's a 78% probability that we close below the previous day opening price. Now, if we breach this opening price, all the probabilities flop up, right? That's kind of our line in the sand. There's a 65% probability that we close or we get below previous day low. So with that in mind, NFP Friday below previous month 50%, momentum has shifted down, and now probabilities are saying continue to expect lower prices. Knowing that in this market condition, the if-then statement is 50% red days, 50% green days, we do have to be aware that we've had 1, 2, 3, 4, 5, 6 red days in a row. So this might be the green day of the 50%. Moving on to where we are in the weekly chart, right? We can see that we have this level right here, right, that has been hit 82% of the time over the last year, right? So out of the 43 of the 52 weeks, this has been hit still to the upside, right? The downside, right, we have hit this area, which is 19%. So this is telling us that there's a little bit of overextension happening. You can definitely keep going lower. You can definitely get below previous month. From a weekly perspective, we know that we're getting kind of overextended to the downside, right? Locking in high day, low days, or high week, low week, below Sunday, above Tuesday, right? We're in anomaly land. We got below this Tuesday price, then we're locking this in as the high of the week, right? Now let's go look at the probability of that being a high of the week, right? So out of the last year, the high of the week was made here 50% of the time, right? So this is more than likely the high of the week, right? From a time and a price standpoint, this definitely qualifies. The problem is we have already hit our levels to the downside for a weekly candle distribution. So it's going to take news to drive us lower. Well, we do have FOMC today, and we also have NVIDIA earnings. Maybe that will be it. Either way, that's the probabilities, right? Coming over to the daily chart, we can see that we've got long false none, and this London OU, this P12 mid, and this Asia OU are high probability of getting returned to. So let's show the probabilities based off of what the Tokyo markets did, based off of what the Frankfurt markets did, right? We can see that this London OU has an 83% probability of being hit. The mode on the right side of the median is happening at 9:30 to 9:45, and then Asia is a lower probability because, like, we're in the 80th percentile of the data. Even though it's 89% of being hit from a time aspect, you're at the point where like 80% of this probability of getting hit has already passed through time, right? So now we're going to do what our high day, low day looks like. Our current high day, low day currently is midnight and 0.443 basis points off of Globex Open, and 610, 74 basis points off of Globex Open. Because this is the box that we measure data from 7:30 to 8:30, we haven't broken out. There's 4 possible scenarios that we can see, right? We can break out here and then go false and hit the other side of this range. We can break out to the upside and not hit the other side of the range by 11:30. Or we can break out here first, the downside, and hit the other side of the 7:30 to 8:30 range before 11:30. Or we just keep going through, right? So we're waiting to see that, but while we're waiting, we're going to go on and do the longs first, right? So long false and long true, right? So coming over to our data, we're going to select long false, and looking at the high of the day, low of the day, we can see that there is data close to around 9:30 to 10:30 for a high of the day, but the most dominant data is during power hour for the high of the day. And that from a price standpoint, off of Globex Open, we've already hit it. We're currently right here on the median where the current high of the day is. So there is a 70th percentile mode right here at 0.5 to 0.6, and we drop off in anomaly land. Now, because we have news catalysts all throughout the day, this definitely could be the high of the day that we see at the end of the day. Right, we push up one more time, make a new high of the day between 9:30 and 10:30, drop down, do the false price action for New York 1, right, and then come back up during the news event at FOMC and NVIDIA earnings and make a new high of the day. We can see for the long false, we can expect a 9:45 to 10 o'clock low of the day, and then suck back into the range. But either way of looking at it, if we break out to the upside first, the higher probability is for us to go false, 59%, and then we can expect high day and low day after market open. Right? For a long true, it shifts differently, right? Our current low of the day has data to support where it's at from a time and price standpoint. Your mode to median is from 0.2 to 0.6. Your current low of the day is 0.43, and at midnight, right? And so, like, then our high of the day, we can go make a high of the day at 9:30 to 10:30 or end of day, right? And then we're in the mode to median zone right now from a high of day where it currently sits, right? Which is at 0.74 at 6:10 in the morning, right? So we're keeping that in the back of our mind. Now we're gonna go figure out what the high day, low day looks like if we break out of the 7:30 to 8:30 box, right? First, to the downside, right? We can see that it's still high probability that we touch both sides of that 6:30 to 7:30 box, right? But it's more prominent that, yeah. So we're going to select false, and you can see that we love putting a low of the day between 9:30 and 10:30, right? Between 0.4 and 0.5. So that means would come the P12 low, right? The 12-hour low right here, where the current low of the day is. We can come into this footprint, possibly take out the previous day low, but we're going to see it suck back into the range. Now, let's say we do that first. We have to pay attention. That P12 low doesn't have to get hit. We can come to London OU, which is a high probability net-in area, and bounce. We can come to P12 mid and Asia OU and bounce. And then if we reject these areas, we expect new high day. If we don't reject these areas and we start accepting through time underneath of them, then we're going to expect for us to come down to P12 low and previous day low and then suck back into the range and then bounce. Like that. Or like that. Right? I don't do to the tick shit. Like I give myself a zone. Right? So even though this is one linear line that represents P12 low, I determine if we're accepting, or we just advertising below these levels and then spending most of the time above it, that'd be rejection. Or are we getting below them, right? Testing them and continuing to stay below them through time, which is acceptance underneath of it, right? But right now we're in a range, so we're probably not going to get the actual move like we haven't all week. Usually we get the move between 8:30 and 9:30. That breaks us out of the 7:30 to 8:30, but this whole week we've been waiting for the 9:30 move to do that. So with that being said, my trade plan, if we sell out of this box, I'll sell it for extended cash flow targets to London OU, P12 mid, and Asia OU. If I have any runners left, I'll let them run through the hourlies. Like, so as long as the hourly boxes are, let's put it on like this is an hour, right? As long as the opening price of this hour is solid, and the previous hour 50% is not being accepted above, like I'll hang on to the short. The moment we start accepting above the previous hour 50 and losing the previous hour opening price, I'll TP and then start looking for areas to go long off of. But yeah, once we approach this zone, I'll be very cautious with any shorts I'm in to be able to flip flop and go long from here for new high day, end of day. Because that's the one thing we got to pay attention to. If we look at the data across all the scenarios, right? End of day, high day. Let me just switch this to all. End of day, high day. The 4 possible outcomes. We got data for end of day, high day. End of day, high day. End of day, high day. So we got some contradiction in the data, right? Because we don't expect the high to be reach these previous day opening price and previous day high. But if it does, right, then I have to go in and flip my thoughts. And then everything flips. This becomes the low of the week, which the median of when the low of the week or the high of the week was last night at 2030. So either this is the low of the week and this is the high of the week, and I'll be looking for the clues to tell me which one today. With in the back of my mind that we have an 83% level still to the upside that needs to be accounted for on the weekly chart. All right, hopefully this helped.